Yeah, so thank you for joining, I suppose. I guess tonight's more of a bit of a snapshot on what's happening in the finance world. We've had a lot of questions on best ways of doing things, approaching things. There's just a bit, of uncertainty out there still, I suppose, with some of these government grants that have been offered and business loans and whatnot. So I guess trying to just answer any questions that people have got around that. It has been a bit of a challenging week, I suppose, because we don't have all the answers just yet. So the presentation I've sort of put together for tonight is basically all that I do know at this stage. So that could all change next week. But as things come through, I'm trying to sort of update people on my Facebook page and email database and stuff like that too. So basically, hang on 2 seconds. I'm just going to share this screen once I can do that. Can everyone see that?
That should work.
Okay.
If the audience can give us a thumbs up, please, in the chat box, that would be fantastic.
Awesome. Thank you. I'm just going to move that over there. All right. How do I go to the next? There we go. Sorry, I'm not normally doing this sort of stuff. So just a little bit about myself. I do have my own company based up here on the Sunshine Coast. It's called Thinking Big Finance. I've been a broker since 2006, but I started my company around 2008. So I guess that was pretty much around the GFC. So it was interesting times. A lot of brokers left the industry because it just got way too hard. But I guess I saw a lot of opportunity, so I decided to stick it out, and honestly, it was probably the best decision I've ever made. I just love what I do. I'm a property investor, and I just want to show people and how they can get around the banks, and which is the biggest challenge, especially in a market like this as well. Again, that could all change moving forward. I mean, the market's always going up and down. It's easier, it's harder. I guess it's just, it is what it is. So I've got a few properties up my sleeve. My partner and I, we do developments, duplexes. We're in the middle of possibly building another 4 units at the moment. So again, I just love what I do, and I'm trying to sort of teach people on how they can create wealth through property as well. So that's a little bit about myself, and let's get stuck into it. So I guess what I just wanted to touch on tonight is the Australian government. They've introduced a new business loan, upwards of 250 unsecured. And there's also some state-based schemes that are currently available for certain people. So we'll touch on that. What clients can do to defer home loan payments. So if you've got a mortgage, investment loan, what you can do and the best way of going about that. And other options that you might have that you may not have actually considered. So that's pretty much what I'll be going through. So what I know so far about the $250,000 business loan that the government's offering. So there's a few extra banks that have jumped on board with this. So CBA, Westpac and NAB and St. George are on this. So basically a lot of the major banks are offering it. So it's sort of, it works like it's a 3-year term up to 250 max lending. So the good thing is as well is that if you're approved, and not necessarily I'm not saying you'll get the full 250, but you can defer your payments for up to 6 months. So during that time, I suppose your interest is capitalised, and then you've basically got 2.5 years to repay that back. So it's pretty much a normal business loan, I suppose, but it is an unsecured business loan. So there's a few little criteria that need to be met, and basically the major ones are the business has to be based and registered and operating in Australia, and the loans must be for business purposes only. So as far as I'm aware, I don't think you can actually use this loan to purchase assets. There's still funding options available for that sort of stuff as a secured business loan or a chattel mortgage or equipment finance. So basically what it is, it's sort of a funding stream to keep your business afloat, to pay your wages, to pay rates and rent, and any upcoming cash flow needs for the business, like buying stock potentially. So it's available to small and medium businesses turnover less than 50 million. And you cannot apply for more than one of these with 2 different lenders. So once you've gone to Westpac, you pretty much can't go anywhere else. So you can't get one with every bank. I've definitely had that question. So obviously they're going to know about it at the end of the day. And it's open for new and existing customers of the bank. So you don't particularly need to be a Westpac business customer to go to Westpac. You can go to NAB or anywhere. So on that note though, as far as I'm aware, the rates, NAB are at 4.5%. And I've heard yesterday, Westpac is going to be around the 7%. So I haven't had anything come out to confirm that, but I guess realistically, that's a big difference in interest rates, especially over a 3-year term. So, I mean, it doesn't take a genius to figure it out, but you'd probably want to go with a NAB option over a Westpac at this stage. So documents are pretty straightforward. This is generally what you'd need anyway for any sort of business loan or any loan for that matter, would be your last 2 years financial statements and tax returns, the last 4 BAS, and possibly an accountant letter to accompany the BAS. ATO portal, so they want to sort of see your tax liability status and make sure that you're not owing the ATO a fair bit of money, because the last thing they want to do is approve a loan like this and you go and pay your tax debt with it. So that's, as far as I'm aware, that's I guess the pros, sorry, not the pros, what's the word? The points, I suppose. Yeah. On this is all I know at this stage. And as I said, things might progress next week when these bankers actually are only going through training to write these types of loans this week. So I tried to get my CBA banker on this call tonight, but he was only going through his training today, so he didn't really know too much about it. So look, we could possibly do this again in a week or 2 time, and I'll probably have a bit more info on that. But the only way you can apply for these are directly with the bank or through a business banker. So most mortgage brokers like myself, we could possibly get you in touch with a banker. But the thing is about these types of loans is because they're so specialised, the banks aren't actually paying the broker commissions to write them. So there's not going to be a whole lot of brokers out there that would do these types of loans, just because they're quite time consuming, obviously. And they're not going to get paid for it at the end of the day. So that, again, could all change. We'll see what happens next week. But the applications are open from now up until 30th of September. So look, this might not be an option for everyone. And the next slide is a fantastic offering, but it's only for Queensland businesses only. So not many people are probably aware that this exists. I had to do a bit of hunting around to find this. And I actually spoke to my Westpac banker and she mentioned it as well. So I jumped straight on and went, oh, this looks really good. So it's only available for Queensland businesses. So each state has got something else going on. And from what I can see, no other state is offering this. And again, that could change. So this particular loan is a low interest loan of up to 250 grand for working capital only, very similar to the other one. But the loans are up to 100 grand are unsecured. Now, anything above 100 grand, basically there's a general charge that's taken over the assets of that particular business or the trading entity. So the maximum loan amount is 50% of the operation's annual wage expense to a maximum of 250. So I guess you'd need to give them your BAS statements and stuff like that to determine what the wages are. So the good thing about this one in particular is the first 12 months will be repayment and interest free. So you basically could get up to 100 grand, if not 250 grand, with no repayments or no interest for the first 12 months.
Wow.
Which is unheard of in this space. So
I'd like to have one of those.
Yeah, absolutely. Years 2 and 3 are interest only, and it's only at 2.5% fixed rate. So it is a 10-year loan term, but years 2 and 3 are interest only. And I did some figures on this actually. Roughly, if you took the 100 grand out at 2.5%, generally speaking, the repayments would be about 950 per month. So I guess that would be, and over a course of 10 years, the interest is just over 13,000. So I guess if you could qualify for something like this, and bear in mind there's only 500 million that's been allocated to this particular scheme, this could be exhausted pretty quickly. So if you're a Queensland business and you feel like this could be a good option rather than getting a standard business loan, I would jump on it. Don't wait. Like, literally jump on it yesterday, because I don't know how long this is going to be available, because I'm assuming there's probably a lot of businesses that are going to jump on this.
Can I just say something,
Sure.
Melissa? We would like to reserve questions for after Melissa's presentation, and then we take questions for her. Please feel free as we go to put questions into the chat box. Yeah, we
Absolutely.
do the same with Paul. Once Paul has been through his presentation, during the presentation, feel free to put questions in the chat box, and we will answer them afterwards. Thank you.
Then just before I go to the next, actually, no, we'll go to the next slide. So just touching on this Queensland one. So the documents required for this particular loan, again, are pretty standard to a normal loan anyway. So you need your 2 years financials and tax returns. Bank account information, so I'm assuming that's going to be the last 6 months business bank statements. The ATO portal, so there's, again, wanted to check out the tax liability status. The obviously ID of the business owner, and what you, I guess, you owe and what you've invoiced out but yet to be received on payment wise. You need to give them a list of that. So I guess you probably have to engage an accountant or a bookkeeper to come up with this sort of information. It'll need to be up to date. So sorry, the ID, license, passport, Medicare, that's pretty standard. The organisation documents, so your certificate of incorporation, and if it's going to be a trust applicant, you need your trust deed, and any amendments to trust deeds as well for that matter. So again, there's applications open on this stuff from now up until the 25th of September, but again, it's until funding has been exhausted. So I mean, that's, you know, not that far away, and considering how many businesses are there probably isn't in Queensland, who knows how long that's going to last for. That's the website there that I pretty much got all this information off, and I'm more than happy to email it through this whole presentation if you like to anyone who wants it afterwards.
Fantastic.
So just to confirm with just having a look, New South Wales, as far as I'm aware, they've only got a payroll tax waiver. There's nothing like this in New South Wales. WA are giving away, well, not giving away, I'm not sure if you'll end up having to pay for it, but they've got a grant of $17,500 for small businesses. And Victorian businesses are $10,000 per business, and you have to employ staff. I couldn't click on the ACT link, it wouldn't open. And I do think there's some other little business loan that could be an interest-free loan in Tasmania. So every state has got something different. But again, I've got a bit of info that I can email through about this sort of stuff too. So that's pretty much the two grants that have come out. Now, with the deferring mortgage payments, so look, this is a pretty straightforward process in most cases. So generally speaking, if you're having trouble making your payments for your mortgages, credit cards, personal loans, investment loans, anything like that, even commercial loans in some cases, you can contact your lender and you'll generally get 3 to 6 months of deferred payments or stopped payments. So generally throughout that time, your interest is capitalised on top of your loan. So at the end of the hardship, basically what happens is you can either increase your repayments to cover the 3 months or the 6 months in repayments that you've missed, or the lender can generally extend your mortgage out or your facility out another 3 or 6 months. It just takes you a little bit longer to pay it off. So I've been informed that most of the time, again, I think ASIC and the credit rating agencies are in discussion about this at the moment. Credit rating should not be affected because technically speaking, the bank has agreed to this financial hardship. So it's not as if you've just stopped making payments and you're not calling them. They've actually agreed to give you the hardship. So that should be fine. Your credit rating should be protected. But the only advice I would give you would be if you're going to contact your lender about this and to sort it out, you need to specifically tell them you've been affected by COVID-19. So your income's been affected. You can't just ring your bank and just decide to put your mortgage on hold for no particular reason because they're not going to say yes. The only other piece of advice I'd give is don't wait until you've missed payments. Just get onto it sooner. If you know you're not going to make that payment next week or next month, jump on the bank's website, put your case in, or call them. You might be waiting on hold for a little bit when you try and get through to them. But look, just get onto it. Don't wait. They want to make sure that they're not chasing you for your payments when you could have actually called them weeks earlier to sort it out. So it'll just make it harder for you for them to approve a hardship case for you if you sort of leave it to the last minute. On that note, the bank's call centres are just blown out. They're completely swamped. And just bear in mind, a lot of these call centres that they actually use are based overseas, like in India and Philippines. So I don't know if anyone's been watching the news, but a lot of these countries are in lockdown at the moment, and all of their workers have been sent home. So I know, for instance, Westpac Bank have had to close their call centre that's based in Manila. So I think what they're having to do now is they've got all these bankers and stuff working in branches. They're having to field a lot of these calls just to deal with the influx that they're getting. So just it's probably going to be an easier option just to send them on their most websites. There's actually a hardship link. There's like in a big banner up the top when you go to their website. Click on that link, put your case in there. You're going to need your loan account numbers and stuff like that. And then generally they will contact you. So I don't know how long this is going to take for them to contact you. That's the only thing. You could be waiting a week, could be a day, it could be 3 weeks. So as long as you instigate it and don't leave it to the last minute, that's my only advice there. And I guess the only other thing I wanted to touch on was other options that are still available. Look, the banks are still lending money. Only a few of them have really changed lending policies. And I suppose that's around, I guess, certain industries like hospitality, retail. Pretty much everything else has stayed the same. Yes, they're asking more questions. Specifically, have you been affected by the virus, or will your income be affected by the virus? So they're pretty direct questions. But I guess now is such a great time to be looking at your finances and consolidating and just getting on a better rate. We had a bank issue a new rate this week. It was a owner-occupied P&I fixed rate at 209 for 1 or 2 years, I believe. So for someone paying 3.5% or 4% on a mortgage to get on a 2.09 for 1 or 2 years, I mean, that could make a huge difference in repayments. And, you know, throw in a consolidation there with a few credit cards or a personal loan, I mean, you've dramatically brought your repayments down. So I don't suggest waiting, because I don't know, again, if lending policy is going to really tighten up over the next 3 months, 6 months, 12 months, who knows? So if you can do it now, just get onto it, because I just, you know, speaking from experience, I saw how hard lending became after the GFC. So, you know, if you've still got a job and you've still got the capacity to do it now, just don't wait. The only other thing I thought of as well, because I guess a lot of people might already be on a fixed rate, and you could have a break cost to pay to get rid of that loan and go to another lender. So a few banks are offering what they call refinance rebates. So by taking your business to them, they'll give you a cash rebate after settlement. So that ranges from anywhere between $1,500 upwards of $6,000. The $6,000 one was only introduced this week, and you have to refinance an owner-occupied and an investment property to get that. So if you're on a fixed rate and you've got a $3 or $4 grand break cost to pay, you could go to a lender like that, get your refinance rebate, and still have change left over and get on a way better rate. So this is what I'm saying to clients. The bank's turnaround times are probably only going to blow out from here. A refinance would generally take about 4 weeks. It could take upwards of 4 to 6 weeks at the moment. So look, just jump on it if you can. Get some good advice. Ask your bank, ask your broker. If your bank can't help you, speak to a broker, because your broker's going to get you the best deal around. I've still got options as well out there. Low doc, I don't know if a lot of clients are still in this space. They actually are calling it alternate doc now instead of low doc. So we've got to be careful on how we approach this. So low doc basically means if you haven't got your financials up to date, you can get away with just submitting, just looking at the policy on this one particular lender, you just need a 2-year ABN and you can do you can give them 2 BAS statements or an accountant income declaration. So this particular lender can also do up to 500 grand cash out, and that's on a rate of about 4.89 at 80%. So not many lenders are in this space anymore, especially with a cash out of that amount. And I guess if you're a business owner, this might be a better option for you rather than doing a 3-year business loan. If you've got equity in your property or a commercial property or investment property, for instance, you could basically just take out a line of credit potentially and just use that for business purposes. Not all banks like doing that, I must admit. So again, you sort of need some good advice on how to get around these lenders if you're wanting to do that. There's self-managed super fund loan options still out there. I've just done a couple of refinances lately. The rates aren't great because they're a specialised loan, but we did one for another client. It was 4.79. I think the LVR was about 65%. So it's nothing like he was on about 6.5%, I think, with St. George. But look, all the majors are pulled out of that space. So a lot of the littler banks, like the mortgage managers, are still offering these types of loans. So but that was pretty much it. I guess if you're wanting to get in touch, I'm more than happy to go through your options. I've got a team, that's Shay and Georgia down the bottom there. We basically all work from home at the moment. So all the contact details are there, and if there's any questions or anything you want to run by us, just give us a call and happy to help. Back to you, Uva. We can't hear you, Uva.
Is that better now?
Oh, yep, you're back.
Obviously, I punched Paul there verbally. Sorry about that. Yeah, technology is fun when it works. So the first question was, when you apply for the first thing that you were talking about, you say we can only have the loan with one bank. That's clear. But can you apply with several banks? Is that advisable or not?
No, I would not advise that regardless of the circumstance. I would, if you're going to go with one bank, just stick it out with that one bank.
Okay.
And then if they say no, of course, you can go to the next one. So I wouldn't be throwing multiple applications out there.
Okay, thank you. Then there was a question from Jay. Welcome, Jay. Does this have to be for the full 10 years or is a shorter term available?
That was one question I don't know the answer to be honest.
Okay.
It is a 10-year loan, and I don't know if you took it out for 10 years, if you paid it back, if there was going to be an early payout cost to pay it back. Because it is government funded, I'm assuming there wouldn't be, because they probably want that money back, sooner rather than later. But in saying that, they're only charging 2.5%. So if interest rates don't move, they could potentially miss out on interest, and therefore they might charge you for it. So again, I don't know the answer to that one just yet.
In any way, I think a great facility if you need it.
Yeah,
and
absolutely.
Avail yourself of it. That'll be something nice to have. Then we have another question. Any criteria on the business turnover and how impacted by COVID-19?
I'm assuming that's for the 250 loan.
Hang on, if we can get Paul to unmute himself, and then he can ask the question himself.
Yeah, hi Melissa. Yeah, it was in relation to the Queensland government initiative. Is there any what's the criteria there for the businesses? Do they have to be in shutdown? Do they have to be severely impacted? Do we know, is there any special criteria there?
Generally, the two loans that have been bought out, I guess it's more of they want to make sure that the business isn't going to close. So they want to give you, they're probably not going to lend you that money if the business is already closed. It's more so to keep the business afloat. So that's, I don't know how they're going to work out how much you can borrow, I suppose. But I guess that's probably why they want to see all those documents to figure it out.
Yeah, my thinking around that was most of the initiatives they don't want to be giving money to businesses that are successful. They want to give money to the businesses that are impacted by the COVID-19, and obviously they're looking at to what sort of level of impact is that going to have where they're throwing the money at. So if you're only impacted by 5%, well, they're probably not going to give you money. So I know a lot of the other schemes, they are expecting you to have certain reductions in turnover, etc.
Yeah, that's very, I guess I'll probably know more information about this sort of stuff next week. I'm going to touch base because obviously these bankers have gone through their training today. So I'm going to get a sort of a bit of more of an insight on how they're going to be assessing and what they're looking for. So I can certainly give you guys some more info on that next week, I reckon.
Fantastic.
Interesting.
Anything else from your side, Paul?
Nope.
Peter, did you want to have any questions? Peter is in the background. Peter is our trusted lawyer. He's been a very experienced member of our expanded team and part of what we call SAP, Strategic Alliance Partner, same as Paul, same as Melissa, and same as the other panel members that we have had on different days. Okay, well, if there's any other questions, Jay, can you give me a thumbs up if you're okay with the answer, or was that all good, all clear? I'll leave that with you. Then I would like to hand over to Paul Raye. Paul Raye owns a company, Think Accountants, and it's somewhat coincidental that both companies are thinkers. Think Accounting, and we have Thinking Big Finance. So we are well in good company.
We're all full of thoughts. Yeah.
Yep. Deep thought. All right. I'll pass it over to you, Paul.
Okay. Thanks, Uwe. Well, firstly, I don't have anything as pretty and as well organised as Melissa, and I feel quite embarrassed by that. But well done, Melissa. Your technology abilities are obviously a lot better than mine. Yeah, first of all, I'm the principal of Think Accountants. This firm's been going for 20 years, and prior to that, I was a partner in another larger firm. We've got a team of 7 here. We're all currently working from the office. We've all got our own offices, but we're managing to walk around each other. But we're going to try the working from home next week to see if that is something that we're all comfortable doing. And so that's, sort of just really briefly about us. We're based in Melbourne. We're a small boutique firm with a wide range of clients from, small plumbers through to, some overseas investors and companies, overseas companies that operate companies here. So that's sort of briefly us. What I wanted to really just sort of cover today, Melissa sort of covered a couple of those things on the fringe, but just talk a little bit more about what the government stimulus packages are, particularly the main ones, and then just run through a couple of little business procedures and things that I think businesses should be looking at doing. I don't know what political persuasion people are, but I think that the federal government and Scott Morrison have done an amazing job so far. I've been very impressed with the way Scott Morrison's handled himself and the way they've brought these things, these initiatives out so quickly, because, we all know from experience, usually these things will take years to put in place while they work out the detail, and then even then the detail's wrong to get to the final thing. But here they've really nutted it out well, thrown a lot of it out there. Some of the detail's not there, but I think it's a matter of getting it out first, getting people's confidence that there's something there, and then just working through some of the minor detail as we go along. So I congratulate them on that. I think they've done a terrific job. The PAYG withholding stimulus, I think probably people are pretty familiar with that by now, that you basically have to be an employer as at the 12th of March this year. And this is managed through your BAS systems, through the ATO, and it's based on how much your PAYG, your tax on your employees, what that withholding is. And basically it gives us employers a minimum of 20,000 up to a maximum of 100,000 over basically the next 2 quarters, so the June and the September quarter. I know we've got a lot of our clients, they're ringing us up today saying, can you lodge our BAS return straight away so we can get our benefits? And so, well, hang on, you're not going to get anything till after the 28th of April anyway, so don't panic about that, because we can't help you do it all, everybody do it all in a couple of days anyway. So we're seeing people that are, very, very keen to get that that assistance. There's a lot of I won't say misinformation, but a lot of information people really aren't clear about out there. So what it is, basically, you'll get your PAYG withholding for that period. Then they'll, well, if we go back, we get the minimum 10,000, hit the maximums. If your PAYG withholding is actually less than those amounts, they'll deduct the actual withholding for that month or that quarter. But then anything else that's left over then will be deducted from any GST liability you have. Any balance left over, that will be refunded back to you. Now, we were initially thinking that also if you had any outstanding amounts from prior periods, etc., these amounts would be deducted from that. But we've only learned today that no, any prior outstanding amounts will not be affected by this first PAYG stimulus. So it'll only be only your PAYG withholding and your current GST will be deducted from that. Any balance left over, you'll get a refund of. So they won't be deducting any prior amounts outstanding. So that's an interesting initiative. I really didn't think that would happen. So that's good to see that they're doing that. But as I said, the main thing is to say to people, don't think you have to rush to get it lodged. Sure, let's try and get it in by the 28th of April, but you know, just settle down a bit. The latest initiative, which is the JobKeeper payment, which I think has just been brilliantly done. I can see how the government, the two reasons for doing it. One is to clearly, I think, take pressure off the Centrelink or Services Australia or whoever handles that these days, take pressure off them with you know, the job seeker initiatives, and then put some work back in the ATO and get those funds out there quicker. And of course, the amounts are actually better than what you'll get on job seeker. So if you happen to be or have been an employee in that period, then this is you know, the better approach. The initiative is basically, as we know, it's $1,500 per employee. So it doesn't matter what your employee is getting. If your employee is earning $100 a fortnight, they will get the $1,500. If they're earning above that, then the employer will pay the amount above the $1,500. So I've looked at it with some people and they say, that can't be right. I mean, I'm only earning $200 a week. Why is the government going to give me $750? Well, the answer is, well, maybe you're going to go to Centrelink and get some extra as well. But I think that's a terrific initiative. Once again, the employees have to be there at the 1st of March. And the turnover of the company has been impacted by a greater than 30% over a similar period last year. Now, what that period is, we don't know. The ATO is suggesting, well, it should be at least a month, but which month, which period? So I think it's a matter of you can work out for yourself just where the impact is for you, and if you can demonstrate that it has been over a period, then you should be entitled to that. So it covers full-time, part-time, and casual employees, as long as they've been engaged for more than 12 months. I haven't yet been able to work out the rationale for that, but I'm sure it's there somewhere. So what employers need to do, if their business has certainly ceased, and we've got a number of those, you know, restaurant owners, event managers, their business is just basically completely stopped. So they need to register and then notify their employees, and some of the employees may have gone off and gotten jobs elsewhere. They need to work, they can only claim that through the one employer. So they need to work out just who's going to do that. But the employer needs to notify them and register with the ATO. And that's probably about it for them, as long as they notify the employees. But talking to my clients and my recommendations for that, especially people who've got the restaurants and events, is don't just pay your employees at $1,500. Get some sort of initiative to get them to come in at some time, whether you have one who comes in one day, another one who comes in another day, and work on your business. I keep seeing this expression of business going into hibernation, and frankly, I hate that. I hate to think people are going into hibernation. I hope they're going into more innovation, using this time to develop their business processes, their systems, their offerings. If they're restaurants, looking at perhaps creating new menus, creating new ways of delivering, And so get your people involved. I mean, I think I'd rather work 1 day a week rather than stay home 5 days a week for my money, especially if I was doing something that's going to help create a better business when we come out of this, when we get more into a recovery mode. And I think it's this is a fantastic opportunity for businesses that are impacted like that to come out the other end with a much better business that they can really take off. So, get them to come in and paint the restaurant if that's something like that, but do something to create a better version of the business when we're coming out of it than we've got at the moment. Now, there's the $250,000 loans which have been announced by the government. I think Melissa sort of covered that, so it's probably much better than I would, so I'm not going to talk about that. The other thing is about managing your ATO payments. My advice to people is basically do not pay the ATO anything until we've got our March BASs lodged. We know what our repayments or outstanding amounts are. Then we go and talk to the ATO. We need to talk to them. It's not going to be automatic. Talk to them about our circumstances, and then they will come to some pretty good arrangements. They're talking about deferral concessions of up to 4 months regarding your BAS and fringe benefits tax, etc. Low interest on your outstanding amounts. You can also vary your PAYG instalments for the March quarter to nil, and if necessary and helpful, you can go back and vary your September and BAS, March, September and December BAS, also to nil, to claw back some of those funds, some of those taxes if you've paid, if you like, in advance, to help with your cash flow now. So, for some business, I think it's critical that we maximise the amount of cash we can get in the business to get us through this. And when we get to the other side, then we can worry about how do we go about fixing up our debt. We'll have time, etc. to do it. We don't have time now, so we've got to survive. And the best way to survive is basically having the cash flow. Now, the Victorian Business Support Fund, nowhere near as attractive as Melissa's Queensland fund stimulus. So all the Victorian government, I won't say all, it's something, is a 10,000 grant to businesses that employ staff, but it's subject to businesses that have closed or in closure or highly impacted. I haven't seen just what the criteria around highly impacted is. Is it 30%, 40%? We don't know that detail just yet. But it's a turnover of 75,000. It has to be greater than 75,000 and less than 650,000. And basically at this stage, it's really a matter of just certifying in writing that you meet the criteria and providing a copy of your most recent BAS. Now, the State Revenue Office of Victoria said, however, they will be conducting audits for 4 years to make sure that you were actually entitled to this 10,000. So they're pretty serious about making sure people aren't auditing the system, which is fine. I think, and particularly with the ATO too, the integrity measures are there to make sure people don't try to inflate the add-on employees they didn't have, inflate tax payments, etc., etc. And if you're caught doing that, the ATO, so they'll actually completely withdraw the whole payment. So I have heard of some people trying to do some pretty creative things out there, and I think it's just not worth it. It's just not worth it. Now, the other thing I wanted to talk about is certainly in these times, and any times, particularly in these times, and we all know that cash flow is the heart of any business. And, in a changing economy like this, we really need to know exactly where we are. So that's, this time more than ever, it's important to build a cash flow forecast at least for the next 12 months. So we know that many profitable businesses fail because of cash flow. I've seen it, and it's not a pretty thing. So I think businesses should have the time now to look at investing time, investing effort in preparing these their business diagnostics, getting to know their numbers. So, what people need to do is simply look at your previous year's figures, plan those out, projecting what you think your figures are going to look like this year, and see how that starts to affect your cash, your bottom line, your cash at the bank. Use your prior year figures to estimate your revenue, estimate your expenses, look at the current circumstances you're in, look at your seasonality, etc. and factor in drops of revenue of 20, 30, 40% or more, and just see how will that affect my cash flow, and when am I going to be in crisis. The other thing I think that we need to do is really, as far as our trading is, we really need to start making more of a focus on our payment terms rather than our price. I think we've often looking at pricing something, and then people will eventually pay us. I think we've really now got to look at really getting cash upfront components. I know certainly in the legal industries, the accounting industry, and a lot of others, the building industry, people are getting upfront components, and I think this is going to become more and more. But I think in any business, if we can negotiate something upfront, so that people are genuine, and hold off final payments until off your final services until the payments have been made. But you need to enforce payment. You need to follow up with your outstanding debtors. If they're exceeding your terms, get on the phone, give them a call. Just don't let them drag out. And also ensure that you've got a good legal practitioner or debt recovery person behind you to help you with these areas. And make sure you review all your expenses and cut out those that you don't need. Decide which are necessary, those which are purely discretionary, and cut out the ones that you don't want. The other thing I think businesses should do and need to do, particularly in these times, is develop some break-even analysis. And just simply work out what level of sales do I need to have to cover my costs, and then we can work from then. Okay, I know what it cost me to open the doors. These are the sales I've got to make. It's amazing. Some businesses, a number of them that I come across, had no idea what their break-even sales figure is. So I think here's a great opportunity to do some work on that. Now, I know a lot of people, and we've done this for a number of businesses, etc. They look at it and say, look, I don't know how to do it. It's too hard. Well, if you can't, go to see your accountant, talk to your accountant, say, how can you help me with this? And I'm sure they can help you develop some cash flow analysis and some break-even analysis. And look and review all your debts, and negotiate with your lenders. Melissa's been talking about negotiating with the banks, etc. Look at all your debts and see who you can negotiate with. Landlords, that's an interesting one. I've seen some interesting approaches by agents for landlords. I saw one which I couldn't believe how horrific it was, that they were sending out to their tenants and basically saying, well, you guys are getting some government funding, landlords aren't, so you've got to keep paying your rent otherwise. I was absolutely staggered by that. And then another one a client sent me today, which was just brilliant. They're saying, well, look, we know landlords are struggling, we know businesses are struggling, but we know that you've got some stimulus packages coming through. When you work out what they are and what your cash flow looks like, come and talk to us, and we'll talk to the landlords, and let's work together. A much better approach than the big heavy hammer approach I saw from these other well-known agents. One of the things Melissa mentioned was the banks being under pressure, and their overseas agencies where they're working through their now Manila and the Philippines. Well, I was speaking to a bank of Melbourne today with one of my clients who's got some funding going through, and he's getting nervous about it because it's been 4 weeks or more, and they keep telling him, look, it's a done deal, but we sell settlements on the 1st of May, and they're saying, look, we just got so many other priorities, and I've had to, the top people ring me to say, look, this will go through, this will happen, and the reason is because they're in the exact same position. Their offices in Manila and in India, of course, have completely closed down. So they've had to re-establish their own offices here in Melbourne to handle all this. And they're under a lot of pressure. So yeah, it's a familiar story. So I think that's about all I've got. There are other initiatives which, payroll tax and land tax, certainly here in Victoria, that they're throwing out there. Small business payroll less than 3 million. State government here very, very generously deferring. They're deferring payroll tax for the first 3 months of 2021. No, something's better than nothing. And with land tax, as long as you've got at least one residential property, and they're less than $1 million, then they're deferring land tax until 1st of January next year. So, look, it all helps. It's all about maintaining our cash flow for now and seeing how we can come out at the other end and then negotiate then. What's the rest of it say? How do
I will
You
bring
hang
the
on.
questions to you later on. Once you're finished, I'll read them out.
Yep, okay, yes, no, certainly can. Melissa, don't ask us to do it today, but certainly by next week. We're just so busy at the moment just getting information out to people, looking at their circumstances and how these government packages will fit in with their cash flow. But yeah, we certainly do that and can do that.
Okay, so I'll just read out the question for everybody's benefit, because the people on the live stream can't see the questions on the Zoom. So Melissa's question was, hi Paul, can your team help clients with their cash flow plan for new and existing businesses? I know I have some clients who just don't know where to start with this and whether it's viable to scale the business or to close up shop.
Yes, as I just answered that one for Melissa. So yeah. Yes,
okay,
can, yes.
So definitely Paul's business can help, and I can speak from experience. Paul is our own accountant. Again, we practice what we preach, and they're doing a great job, and they take assisting people seriously. Okay, there was a question from Peter in regard to the previous issues. If a business has no PAYG but does have GST less than 10,000, is then no GST payable?
Well, they have no employees, that we're saying.
Peter, you unmute yourself and then ask the question yourself.
I can't.
If they've got no employees, Paul.
No, well, if they've got no employees, then they're not getting well, if they've got no employees, they're not paying PAYG, so there's no benefit from there. They'll still have to pay their GST, yes.
Okay, so sole traders with no employees will still have to pay their GST liability for the March quarter.
Correct, but they'll be eligible for the job seeker payments though. If their businesses have been impacted by more than 30%. Now I know that in discussions with some of the professional bodies with the ATO, they say that the ATO is saying, well, look, we're not going to be perhaps too hard on the 30%. If they do 29 or 28%, that's just in discussion, but that's apparently the discussions they've had.
And if they've been trading so if they don't have March sales figures because they've been trading for less than 12 months, or April sales figures. So my understanding is that the ATO's got a discretion to consider other comparable numbers for the period that they've been trading to determine the 30%.
Yeah, that's what I understand too, Peter. They do have a discretion. I was only in a session today with some tax specialists who were running through those things, and that's what they understand, yes. Okay. So they're saying, obviously they know that people have started businesses in the last 12 months, so they've got to look at other criteria because we don't have a period 12 months ago to compare, to look at. Yeah.
Thanks, Paul.
Yeah, look, that's great. There was another question to you, Paul. What's the definition of highly impacted on the business support fund? Do we know that yet?
Wouldn't we all like to know? That's what I say. We don't. Some of this, there's no detail. Closure? We understand highly impacted. Well, at least with the JobKeeper payment, they've picked a 30% figure. With the State Revenue Office, we don't know at this stage just what highly impacted means. So what I'm saying to people with all these sort of things is, look, apply for it. We'll work out later whether you satisfy the criteria, but apply for them now. And if we get knocked out, we get knocked out. But get in there first.
Absolutely. Worst thing that can happen is you get a no. I definitely
exactly. If you don't ask, they can't say no.
Say that. I have put both people's websites in the chat. So Paul's for the people at the Facebook Live. Paul's website is thinkaccountants.net.au, and Melissa's website is thinkingbigfinance.com.au. We're big into thinking tonight, that's for sure. You can also watch the previous panel members' discussions online. They are available on Facebook on our site, Property Friends. And if you want to send me an email, I'll stick my email address, or look, I'll say it, uwe@propertyfriends.com.au. We're certainly happy to make any recordings available. Now, unfortunately, Facebook is up and down like a yo-yo. I have restarted this Facebook Live 4 times during this session, so that will not be a complete and entire recording, but be that as it may. Now, we had a question from Kylie Martin on the Facebook Live. Kylie is asking, would you buy a house now, not investment, but to live in, or wait? I guess that's a question that I feel privileged to answer. And look, I'll give it over to the panel as well. Kylie, especially a principal place of residence, to me, is a long-term investment. Now, time heals all wounds. It depends whether you sit in the negative camp and that says the sky is falling down, or you sit in the positive camp and you look at the silver lining. I can only give you what we are doing. We are doing deals out there up to 8% rental yield. So we are still investing. Now, that's a different story, definitely, than principal place of residence. In my view, the best time to buy a principal place of residence is yesterday. So, for a number of reasons, there is a forced savings plan involved in that. There is ownership involved in that. You can make the capital gain over time, and as a principal place of residence, that's even tax-free. I'm not an accountant, talk to Paul about that. So, to me, it's one of the best investments because it is an investment into yourself and into your own family. So having said that, I believe it's a good time to invest into your own principal place of residence, into your own house. Also because the market is a bit slower now. Very, very clearly, most people are fearful. And when people are fearful, they sit on their hands. So you are in great shape to now enter the market and use the time where there is fear and less competition for houses. And on top of that, there may well be some owners that want to sell or need to sell. So yeah, I think it's a great time. Look, I open it to the panel. Peter, you are a lawyer that is deeply entrenched in the property game, and Melissa as well. You know, what are your views?
The only thing I would say, Kylie, is to get some good legal advice about the terms of the contract before you sign it, because one of the things we would be recommending for any buyer, particularly someone who is going to borrow money, if you've got the cash, then maybe a condition like this isn't as important. But if you're going to borrow, then from our point of view, it's a good idea for a buyer to consider a condition that allows them to either extend settlement date or suspend their obligations under the contract should something that happens with the coronavirus pandemic prevent them from being able to settle on time. I'm in Queensland, so in Queensland, time is of the essence of the contracts. So the settlement dates are fixed, and you can only extend the settlement date by agreement of both parties. So because times are very uncertain, and because most markets are now going to be a buyer's market, and so you're hopefully going to be able to get conditions that are special conditions in the contract that are favourable to you as a buyer, then you should definitely get some legal advice about a condition that protects you if something should happen from the time the contract's signed till the settlement date, that prevents you from being able to settle. Otherwise, I'm with Uber. There's going to be bargains in the marketplace from my point of view. And obviously that's not legal advice, but you know, from my point of view, if you find a bargain and it's a property that you would like to have as your principal residence, then I don't see a reason for holding back.
Sorry, let's try that again. Melissa, you in the game as well. What's your view?
Yeah, look, I'm much the same. I'm an opportunist and I see opportunity in any market, I suppose. So if you can buy that property that you've had your eye on and you can possibly even get it cheaper, the owners might be desperate to sell, as you said, I mean, jump on it. If it's going to be a long-term investment, I think. So yeah, by all means.
And I love what Peter has said. Really, to me, the upfront investment into the right supporters of your team, into the right team members. I said yesterday, and I will repeat it, you can only fly as an eagle when you're surrounded by eagles and not when you're surrounded by turkeys. It's pretty hard to soar like an eagle. That's the saying. I talk you get used to that. You can only soar like an eagle when you are you can't soar like an eagle when you're surrounded by a turkey. I get it right eventually. You don't have to be very proficient in English to make money, so that's okay. Yeah, look, it is hugely important to speak to the right people. And if you bugger up the contract, as Peter says, it's done. You're done. If you bugger up your financing, you're done. If your taxation, your accounts are wrong and wrongly set up, you're done. Please do yourself the favor, and this has got nothing to do with sales. It's got everything to do with do it right the first time. So yeah, I'm a strong believer in setting things up properly, and please set up your own team on our website, propertyfriends.com.au. We have a reference list of strategic alliance partners. The panel members are certainly on that. If you have any questions about any of that, we will lodge the recording of the Zoom meeting. So that's the full meeting on the website, on our website. So you can access that because the Facebook Live is just too up and down. So yeah. Okay, Kylie, I trust this answered your question. Hello, Angelica. There's more and more people coming on the live stream. It's a bugger that the live stream is so up and down. Anyway, I trust that has helped. We are at the 1 hour mark. We said we'll take an hour. Any parting words from any of the panel?
Only one thing I'd say was just perhaps a little bit in relation to what Peter asked before, that with the minimum payments under the cash flow, PAYG cash flow stimulus, you don't have to have paid any PAYG as long as you've got employees. So you may have some people who are not subject to PAYG withholding. So even if it was nil, you would still get your 10,000, but the GST would come out of that 10,000. Yeah.
Thanks.
Okay.
All right.
All
everybody else is home except me, I gather.
Well, we are the ones that deliver the bacon, my friend. That's funny English again, and that's all right. Okay, look, I personally like to thank the panel for coming on. As we have seen, we've got tremendous amount of knowledge in our advisory panel. Make yourself, avail yourself to that, take advantage of it. The recordings that we have done are second to none, and I really mean that. We are all specialists in our area. So we have started with the general overview on Wednesday, which was 10 minutes each panel member. We then took it into half an hour for 2 panel members, as we've done tonight for Paul and for Melissa. Tomorrow we have got Paul Raye on the subject of insurance and Paul Humphrey on the subject of self-managed superannuation fund. So again, 2 very hot topics. And I know already of a couple of questions that I will ask Mark. For example, there is a rumor that if you do give rent relief, that your landlord insurance may negate cover. I find that hard to believe in all the circumstantial surroundings that ScoMo has announced. But as I said at the beginning, get your advisors, get your specialists to tell you the truth. On that note, thanks again to the panel. Thanks for watching. Thanks for the great questions. And the recording will be up tomorrow morning. Thank you very much.
Cheers, guys.
Thank you.
Thanks, Uwe. Good night.
Thank you.